Today was OPEX, and most people get completely demolished whenever OPEX happens. But I call a really wild trade, of course, for my streaming, for my Discord. So I'll be explaining my trade, and more importantly, I'll be explaining how and where I approach OPEX that's different than most traders. So before we get into it, I just want you guys to see that right there. I don't know if you can see it. Faker signed jersey, signed by the whole team. I think it's kind of like faint. I don't know if you can see the signature. I don't know if you guys can see it right there. Signed, whole team signed, figure jersey from the latest World Cup winning season. I don't know. And then also back there, I don't know if you can see it. Wait, let me go this way. Hold on. Just picked up a Evolving Skybox and Phantom box. I don't know. Just a little flex before we get into the video. Now, let's talk about the trade first, and I'll jump slightly in OPEX and what OPEX about and all that shenanigan. The trade that we took was this long position, pretty much riding back to the all-time, or I'll say back, but whatever the last all-time was. Overnight, we had a strong gap up. We had news that the Strait of Hormuz, whatever it's called. Honestly, I don't know how to pronounce it. It's gonna be open. So strong gap up, as you can see. It came the news at 8:45 right here. Yes, which I'm covering a little bit, but it's not really too important. It broke the previous all-time high. So how strong it was. Well past at this point, and Q lagging a little bit behind. So my thought process was, and I announced this yesterday actually in my Discord. I mentioned that either A, we were gonna get an initial sell-off right off the open and then grind back up the whole rest of the day, or if we do get a push up right off the open, we'll probably just kind of go sideways, slightly up, maybe small dips, but we're not going to sell off today. So when we first, from a technical perspective, first open up, we have this huge 5-minute gap right here. As you can see, right 9:30, we dump straight into it, but we're holding it very strongly. Now, let me ask you, do you want to short into this 5-minute gap at all? Do you want to short into this gap? The answer should be obviously a clear not. Maybe if you lose this gap and then you can continue lower, you can get a retest entry to a different story. But our perspective in that case was that, yeah, we were going to be bullish as long as we held that gap. Off the open, we also had an SMT here with ES as well. I should make myself a little bit smaller. You guys want to see me, but we'll make the charts the start of the show, I think. What do you guys think? Where's the today? ES, yeah. On this dip right here, we got a bullish SMT, as you can see from this low right here on NQ, and this low they got taken out on ES. Again, kind of building. I have a bullish bias, and now I need to build a bullish case scenario to find an actual entry. Now, the one thing that was scaring me just a little tiny bit is that we were forming a lot. We had 4 equal highs here on NQ. So I was a little bit scared that we might pop up and then fade back down. But again, that was the only thing versus all the bullish ideas that I had. So we jump on 1 minute. 1 minute, we get this really nice inversion, right? Really nice inversion. We held the 5-minute golden pocket from the latest leg higher as well. And I decide to enter the trade right as close essentially of this 1-minute candle at 9:50 a.m. Enter trade, and straight off the rip, big candle, again taking out all those equal highs that we created. Now there's some liquidity right here from some people that are shorting, so we get an initial pull back down. I told the chat, stay calm. As long as this bearish inversion here gets held, we're completely fine. So our stop was looking like this. This was the whole trade, how it was looking. Straight up to there, hopefully we can get it. It will be a 7.7 hour trade. I ended up closing almost pretty much all of it 828. I thought it was just not really worth an extra 20-30 points for me to watch this trade in case it wants to pull back down. So I closed it around a 6-hour trade, and I was pretty confident in this trade. And we had an initial push up right here. It was 40-50 points. I took no profits. I told the chat, if you want to be safe, feel free to. I personally want. We are going to head into some bearish gaps, but again, I just felt so strong about the bullish for not a tactical perspective alone, but also a fundamental perspective alone. Even here, we're still looking really bullish, although it's going a little bit sideways. We're holding the New York pre-market high. So we pushed up. Some targets that I had on the way up would have been maybe this bearish GP, but again, we just blowing right through it. We got this dip down, but it is to be expected. We're retesting beautiful levels. We had all these equal highs, a perfect retest to continue higher. No need to panic sell into these red candles. No need to. Just follow the trades. If you're going to take TPs, set some TPs beforehand, and then take them. So we rode it essentially all the way up. And it was a beautiful trade based on analysis that had already created pre-market. Now let's talk a little bit about OPEX quickly. I'll pull up your ChatGPT so you guys understand how to actually read OPEX, right? So the way that OPEX works on a really basic perspective is essentially that equities, options are expiring. A lot of them are. So there's different OPEX. There is OPEX most months, but certain months there are the quarterly options, which is a ton more expiration dates. Now, when we're looking at those options, you're going to have to look at the ETFs of QQQ and SPY. So you're going to be looking at this price. So what you're going to see is essentially you're going to have a few levels that are going to say, hey, there is X amount of options expiring at the 650 level right here. I'll put QQ on the side. There's going to be 10 million that are expiring at 650. So this will act as a magnet for price to go up there, as if those options expire well below it, market makers are going to lose a lot of money, and the opposite goes for the bearish side, right? If there's a lot sitting at 643, so it creates a box that pins the price down. Now, within that box, if the options are mostly expiring to the top side, it will slowly pin it up towards the top of that box, right? So again, you can use ChatGPT for this. Guys, simple stuff nowadays. Before, you would have to go on websites, I have different subscriptions, and look it up. So all I did was ask ChatGPT, hey, what is the call and put OI for today? So the put OI would be options that are expiring, that are sold puts, and then the opposite goes for the long. So the number one today was the 650 strike. That means 650, there was 9,800 options, so that's tens of millions of dollars. I think it's around $10 million, something around that line. Maybe more, could be like 20, 30 million, I forget. I could look it up, but it doesn't really matter. So I know price will be pinned between the towards that 650, and then if you keep going higher, 654, again, more gravitational force to the upside. So I know that QQQ is gonna have to get slowly. And now this looks not as low during the time, but if you looked at the 1 minute, it was a little bit slow at times to this 650 area. And look where we're sitting. We're sitting right around that 650 area, and that's where price is going to get pinned towards and kind of hold. Because why? Because market makers don't want to get burned. So if they can let the options expire at or near their expiration price, they're not going to lose any money, because the way they're making money is by volatility between those two ranges, right? So it's going to gravitate towards the higher part of the range so they can make a little bit more money. So that's the only way I would have traded this is to the long side. And the only way this doesn't really play out always like this on OPEX days is if you have a catalyst or some kind of news. Now, again, today we did have some mild news. We had, or I guess a medium-sized news, heavy news, or whatever you call it, the Strait of Hormuz opening up. But again, that's a positive news, which lines up to where the market makers want to push up the price, which is to the top part of this box, right? So now the closer we get to that point, it's again 650 to 65 zone. It's where you're gonna be. You don't really want it to be above that. So I expect price to sit around 650, maybe push up 650, 651, 648, but within that range of $3 to $4 is where price should probably close up by the end of the day, or at least that's where they're going to start unloading some of those options and let them expire. So essentially a combination of fundamentals, which you guys maybe don't see me talk about enough, but if you are an OG to the channel, remember me talk about oil, remember me talking about gold before we went crazy years and years ago, 2-3 years ago. Talking about buying gold, shorting oil all the time, a lot of fundamental stuff. But there is mechanisms that go behind just the technicals of it that at times you can use and take advantage of. Obviously, you wouldn't use this every day, but you can at times take advantage of it. And we did today, right, in this really beautiful 6-hour move. Of course, traded live in my Discord. And if you do enjoy my Discord, opening it back up, I've had it closed for well over a year. I will leave a link down below. As always, if you enjoyed this video, make sure you like, subscribe, and I'll see you guys in the next one.